Hi there, Friday, July 15th, 2022. You know, back in December of 21, I lost my dad. So this week, it's been about 7 months. I miss him dearly. I actually woke up this week and I'm like, I'm going to give my dad a hug. And obviously, I could not. So my dad is no longer here, but the lessons he taught me are. And he was a man of very few words and a big believer in words having meaning. So I'm passing those lessons down to my son, and we're on the way home from a baseball game, and he says, Dad, I never get to whatever it was he said. And I said, Jacob, never and always are two very strong words. You sure you don't want to think about that? And he backed it up, and he said, Dad, I often don't get to. And I said, that's better. So why am I sharing that with you? Well, because one of those words is applicable in the investing world, and it's this: managing equity market risk with anything other than the equity market will never help you in the equity market. Period. Let me share a chart or some charts with you. 4 charts from this year as of yesterday, all clearly trending down. What are these charts? S&P down 20%, bonds down 13%, gold down 7%, and Bitcoin down 56%. Listen, this is no secret. We all want to be profitable when the stock market goes up. What do? You buy the stock market. We buy the stock market because we want to take advantage of stock market rallies. Well, what do you do to take advantage of stock market declines? Well, you sell the stock market. You don't buy bonds, gold, or Bitcoin to profit from a falling stock market. And let's say those asset classes do go up. Let's say, hey, you know what? Bonds go up, gold goes up, Bitcoin goes up. Stock market's still down 20%. Are you okay being down 20%? I'm not, because when you buy any other asset class, what you're really doing is saying, I'm okay with losing in the stock market. My solution is just tolerating a loss. Are you good with that? Not me, and I know our clients aren't either. So again, you want to profit from stock market rallies, you buy the stock market, and we do that for our clients. You want to profit from stock market declines, what do? You short the stock market. I was actually speaking with someone this week, and he's like, wow, the stock market, the selling's been relentless. And from somebody who manages risk every day, I'm like, yeah, the selling has been relentless, but so has the buying. So take a look at what's going on in the month of July. Let me share that chart with you. Here's July. Here's the end of June. Through yesterday, the stock market is actually up. It's up barely, but through yesterday, the stock market was up on the month of July. And clearly today we've opened higher. It looks like we're going to open higher and go higher, maybe even through Monday. But as relentless as the stock market selling has been in the month of July, the stock market buying has also been relentless. Now let's talk about historical distribution of S&P returns. One more quick thing I want to share with you because it's fascinating. I shared it on Bloomberg TV the first time I was on Bloomberg TV. Take a look at this chart. A lot of people have seen it. This goes back to 1993 on the chart. This is a Bloomberg chart, by the way. It goes through, it says September of 21. Buy the close, sell the open. That's the overnight move, up over 1,000%. Buy the open, sell the close. That's down 13%. Look at what July has done so far. Absolute 180. Overnight down over 5%. Intraday up over 5%. That shows you how crazy this year has been. Whether it's stocks, bonds, currencies, energies, metals, volatility is clearly back. And what is volatility? That's opportunity. What's opportunity? It means you can be profitable or more profitable, right? So, bottom line, what's the most important thing here? I know it's a long video. Be careful when you use the word never and always.